Let's jump in here. What I wanted to talk about today, and I want to thank everybody for their responses and suggestions for a workshop. I think it's awesome, to get some ideas. And some of these ideas may not be workshops, but they may be segments in the future. So again, thanks to everybody for suggesting some various topics. I did want to go with the island reversals because we do talk about islands quite a bit on here, and they are significant in that many times they will give us some pretty good signals as to potential tops or bottoms on the chart. One thing I want to point out, though, and I'm going to start here with Broadcom AVGO. For you to get or to have any kind of a reversal, you have to have a prior trend in play. So that's where it all starts. You can't really have a reversing you can't have any kind of reversing candle or island or pattern or anything without that prior trend. So perfect example here is AVGO, which had been sideways consolidating back in August through October of 2017. Then all of a sudden, look at the volume coming in, and we make this big move to the upside. We gap up the final high here. You see a gap up, and then the very next day, you gap back down, leaving this candle up here on an island. So this is essentially the definition of an island reversal. Now, it's really important to note a couple of things. Number one, you do need this prior uptrend in play. Number two, it does require a gap up. And number three, it requires a gap back down to leave that particular, in this case, sole candle on an island by itself. So the gap down confirms that top. And so that's what you want to keep an eye on and want to watch. The other thing is that this is not a long-term top. When you see these reversal patterns, this isn't suggesting that Broadcom is about to start a bear market or is going to begin downtrending. What it is a short-term top. And I would be looking at other indicators, other technical indicators to corroborate whether it's a short-term top or whether it's a longer-term top. Just by looking at the pattern itself, I'm just looking for a little bit of weakness. So when you get that gap down, you literally go down 1 or 2 days, and as far as I'm concerned, the signal was a successful signal. I'm not saying it's going to come down 10% or that it's going to come down to where the rally started, anything like that. In this case, AVGO, after confirming with this gap down, leaving this candle on an island, went all the way back down and actually tested the rising 20-day moving average, which I find to be one of the key support levels in an uptrending stock. So we bounced off of that, went back up, and it's interesting how you can kind of follow the technical, just the technical direction and how everything evolves over time. But here, AVGO breaks back out again to new highs, but look at the volume on the next breakout versus the volume we saw here. Big difference in volume. So in addition to breaking out, there really were two momentum issues. Number one, you could see the volume was pretty light on the breakout. It was certainly no more than average, and that's a problem. Now, part of this could be that it was the Friday after Thanksgiving. That was part of the reason why this breakout had light volume, but we really didn't confirm it the next day with much volume. So I would argue that it still was showing lessening momentum to the upside. The other thing is the next day when we printed a reversing bearish engulfing candle, that's a reversing candlestick, PPO was lower. So now you've got a negative divergence with that false breakout on light volume. So anyway, I just wanted to kind of continue through, because when you're looking at these island reversals, just keep in mind that the uptrend is still in play. It's just short term. It maybe ran a little bit too far, too fast, and so we get the pullback, and then you have to follow your other technical indicators. It's not just oh my gosh, there's an island reversal. Now we've got this long-term downtrend in play. It's not like that at all. Let's go through a couple of others here. And I'm really just going to go through and give you examples. I think the key is to spotting these. And as with anything, with candlesticks or patterns, you really just need to have more and more experience just seeing them, and then you learn to see them and anticipate what to expect after you see them. Here is CONN, C-O-N-N. Beautiful uptrend in play here. Nice expanding volume. Everything looks great. We get this gap up. And now it's not just one candle. We just don't gap up and then gap right back down. Here we gap up, And we just we move a little bit higher, a little bit lower, but for the most part, just sideways consolidating. And then we get a gap down, which leaves all of these candles up here on an island. So it's like here we can move up, and then all of a sudden gap up, trade in this range, and then gap back down, leaving them on an island. So this is referred to as an island cluster reversal. So it's not always just one candle. It can be multiple candles where you go sideways for a period of time and then gap back down. But check this out. We came back down. What happened? We printed a hammer right on the 20-day moving average. So once again, this was not a long-term top. This was a short-term top. Came back down, tested a key area of support, and then back up again. So I would say, based on what we're talking about here, these signals are not necessarily signals you should pay attention to if you're a long-term trader. If you're a buy and holder and you want to be in a stock or in an index or an ETF or whatever, as long as it continues in an uptrending pattern, then island clusters and island reversals, these are not, they really shouldn't bother you because they're more for short-term traders. All right, so here we come back down. We get that test of the 20-day. Then ultimately we break back up above. Look at this candle here where we break above, and check out the volume on this. This is what you want to look for. However, we get to the top, and once again, we start to drift lower. We have negative divergence, higher prices. This time we actually had heavy volume, though, so it would be hard for me to argue negative divergence. And in this case, we didn't really sell off much. All we did is drifted sideways for a while. But notice again, technical analysis, TA 101, broken resistance, broken price resistance becomes price support. We come all the way back down to the level of the breakout. It took 5 weeks later, but we did manage to come back down and hit a key price support level and close to that 50 period moving average as well. Costco. Check this one out, all right? So we got this prior trend working, get the gap up. And by the way, here was a gap, and we went sideways for a little bit, but then we gapped higher again. So there was no island reversal there. Here we gap up, go sideways for probably 2 to 3 weeks. Actually, looks like about 3 weeks. And then look at the gap down. This was earnings related, I'm pretty sure. But gap down, left all these candles on an island, and then we downtrended for quite a while. All the way, actually, until we put in a lower low with a higher PPO, positive divergence, and that marked the bottom. So again, once you go through these periods of reversals or whatever, it's back to using your other technical indicators. In this case, huge sell-off. This is not a light volume pullback to the 20-day moving average. This is a massive sell-off on very, very heavy volume. Completely different animal at that point. The next one, Micron Technology. This one is maybe a little bit iffy as far as whether or not it's a candle. I was pulled up the chart, I looked at it, and the first thing I saw was, well, that looks like a little bit of a island cluster. But I prefer if they would just simply go sideways. This one kept going up and then went sideways this inside day the next day before we gapped down. But we did have a gap up, traded kind of sideways for 3 days, and then we had a gap down. You can see the volume really picking up. And in this case, we started breaking down on very heavy volume. FINL. Here we got a downtrend. Now I've been, most of the charts, I was really trying hard to find a bottoming island reversal, but it's hard when you're in a stock market that's been going up for the last couple of years without too many pauses. I mean, the overall market hasn't really pulled back much. So it's hard to find stocks that actually go through an extended period downtrend. But here was one, finish line, FINL, downtrending for about 6-7 weeks. You can see clearly we had a gap down from this prior high. You can see all of these candles in this cluster, and then a gap up on the other side. So downtrend, you got that trend in play, gap down, and then you gap back up out of it, leaving all of these candles on an island. And you can see what happened from there. So those are, this is, again, another signal that you want to look for. So it's not just on tops. You also have bottoms that form with islands and island clusters. All right, Delta Airlines. Check out the last high back in January, mid-January. Had a big move up, the final gap up, sideways consolidation for about 6-7 days, and a gap down. Left them all up there on the island, and back down we go. And so far, it's, this one is certainly trading by bear market rules. We're below the 20 day moving average, and we're struggling to get a close above it. All right, ASML. I think these were the last two. What I thought I would do is just kind of open this one up to the audience. So I don't know if you can maybe look to see, Aaron, but I'd be interested if someone can tell me where there's an island cluster reversal on this particular chart, ASML.
Okay.
All right.
Watch.
Okay, and so what I'll do while you're taking a look at that is just pull up the chart. I mean, this is one that actually had come out with great earnings and had huge volume. And you can see there was one level of support. Here was probably a second level of support, and then the recent low that we had prior to the run up. So these were kind of three areas of. So I mean, we could go way down here, but I'd be shocked. I would not want this stock to come all the way back down to below 170 after making this huge move with earnings. But it did put in this hammer, started moving back to the upside, and right now is actually continuing to trade above its rising 20-day moving average. So I think ASML continues to perform pretty well. I mean, it did pull back a lot, but everything in the market sold off. I mean, I just referred to it as the baby being thrown out with the bathwater. When you get a high volatility sell-off, everything gets sold. Market doesn't care. It doesn't want. Market makers aren't buying anything. So everything just kind of takes a turn for the worse until we see reversing candles and that volatility index reach a peak, which we saw. But any responses on this one, Aaron? I don't know if you've on mute.
I'm sorry. Can you hear me now?
Yep, I got you.
Yeah, the buttons didn't work right. Okay. Let's see. They're saying not earnings. I'm not seeing anything yet. I don't know if we're on a big delay or not.
Oh, in the chat room? Okay, well, I'll just go ahead and annotate here. What I was looking at is right over here.
Previous top. Yeah, that's what somebody just said.
Yep, right in here. I mean, you can see some pretty bearish candles. Here's one bearish candle, although the volume wasn't nearly as, well, it was kind of average. But yeah, sideways consolidation. You gap up and trade above this gap the entire time, and then gap back down below all of this action. And so you're effectively leaving 2 weeks worth of candles up here on an island. Now, again, this happened to coincide with all the selling that we saw recently. And I tried not to pick these because everything sold off. So I don't really even know if this is a great example, but it technically is still an island cluster reversal off of an uptrend with an ensuing downtrend after a gap up. So this was one. I'll do one more, see if anybody can spot this one. This is IBM. And so see if you can find anything on IBM. Again, this actually, I'm going to annotate this one. This came down to a really good support level here. And I remember when John Hopkins was on from Earnings Beats, he talked about IBM after it had reported really good results, all of the selling. This is a perfect example, I think, of the baby being thrown out with the bathwater. IBM retreated quite a bit, over 10%, looks like maybe about 13% or so from the high, all the way back down to test this price support area and almost filled this gap, which is really pretty amazing. Back down below 144 before printing that hammer and going back up. You can see right now it's struggling to try to get back through its moving average, but it would be bullish, I think, if we get a close back up over, say, 157 on IBM. So still watching this one pretty closely.
Yep, they're saying that one was pretty obvious, actually. At least the smarties in the room.
I'm talking about which one? Where?
I think it was on IBM. I'm looking.
Yeah, the recent high. I was looking for it, but yeah, January is what I was looking for.
Yep, we got that too. Somebody, January 17, 18.
Yep, right there. So you can see here's your uptrend. So again, you want to have that prior uptrend in play. You gap up, and then you gap back down, leaving those candles on an island. Now, again, this kind of coincided a little bit with all the selling. The real selling kicked in over here. So we did have an island reversal before all the weakness hit. But notice as we tried to rally, we couldn't get back up into this zone. And then we eventually turned back down and went back down, found a bottom in the mid 140s, and now started to turn back up. All right, last one I wanted to mention, because this is just a final All right, trying to get out of there. There we go. This is the final one. I wanted to show you why you got to be careful about assuming that you see an island cluster reversal and you decide, okay, I'm going to short it before you actually get the confirmation. This is what can happen to you, so be careful. FedEx, we were just talking about this one a little bit ago, but here is a beautiful move up. Check out this gap up, sideways consolidation. That looks like an island cluster to me, but do we ever get the gap down to confirm it? And the answer there is no. We break out to the upside. So for those of you who like to anticipate these moves, I would be really careful doing that, especially in a bull market, because many of these sideways consolidations and these cluster reversals also can be a flag. So you got an uptrend, and this can be a flag, and you can get a bullish breakout. So be careful that you don't try to jump the gun and be a little premature into a position, or maybe sell the position because you're nervous that it's sitting in this island cluster. You don't want to hold it until that gap down. Well, that's a problem in the market in general. I mean, your trades can always fall apart. There's nothing wrong with this pattern until you get that gap down to leave these candles on an island. So in this case, I think that you remain in a bullish pattern. We never got that gap down, and in fact, we ended up breaking out. And it wasn't until we printed this final high with the PPO rolling over that we started to see the selling in FedEx. So that's really what I had for today for this segment. Appreciate everybody tuning into it. Let me just go through quickly the summary here. And that is the keys for these island reversals. Number one, you do require that prior trend. So if you got sideways action and you gap up out of that, or you got sideways action, you gap down, that is not an island reversal because you don't have any stocks on an island after an uptrend. So you do require a prior trend. The gaps represent exhaustion of the current trend. So the gap up, you're getting the final people on board, at least in the short term, and then you gap back down, leaving all of those candles on an island. So I would consider these only for short-term trading. I mentioned that earlier. If you're a long-term investor, and you're looking at weekly charts, you probably could care less about island reversals. These are much more, they're much better signals for short-term traders. And then the final comment there is, as always, use other technical signals for corroboration. So after you get these reversals, you can be checking out volume. You can look at gap support. You can look at the rising 20-day moving average. Those are areas where you might want to re-enter and reestablish your long position if it was a long candidate.
All right.